All right, so today is February 7th, 2024. This is market dissection class. Coming in today, we're seeing that, okay, we've dropped off yesterday, rallied in the PM session. This is our opening range gap, this line that I have drawn out. We see that London took out where market open was, started to rally up, and yesterday on market review, we were talking about how it's expected for this market to rally. So coming in today, looking at price action at 620, I'm seeing that we're breaking out from yesterday's highs. We have highs on the left-hand side and we have all-time highs higher up. So my bias is long, but I do want to see some measure of sell side taken. So just looking at the 5-minute time frame in all of this, I can see this is the first retracement leg. So this is the sell side that I have marked out. And I just wait to see market open. So I'm gonna drop down to a 1-minute time frame. 1-minute time frame. We're gonna play this out. So we got a few candles in here. So right now it's 6:29. Next candle is market open. I see market open has a drive down. I see that the next candle created a 1-minute fair value gap inside this area right here. So I marked that out, which is this box right here. Also on the 5-minute, I could see that the next 5-minute candle tapped in over here, and I have this fair value gap, and this one was also matching with that one. So I put great deal of importance in this fair value gap. We can see that on the 1-minute time frame we've dropped off. So automatically I'm assuming that we're gonna run these lows. We see that price drops in this area, still equal lows left behind, tapping off of this 1-minute FEG that price created over here. So I'm anticipating for price to drop down. Now obviously I take my fib, I line it up. So this is the original spot, the 50% with this leg down. And then now I'm looking at this and we've pushed up to the 30% or so. So I did take a short entry over here, which it's probably not even gonna let me do. Let me see. Yeah. So this was the short entry. I see equal lows. I did have a stop loss up here. So we see that, okay, we have a stop loss. If price does come back and knock us out, which it did right there on that candle, then price needs to hang on. This is a liquidity grab off of this candle, so it would be good for the next candle to hold and drop down lower, but I see the next candle push up, so I'm just waiting patiently. We have the 50% over here, and we have this higher up FVG. Now, if I want this thing to go long, I would want it to pull up, break, retest this level, and then continue up to the upside. Looking at the 5-minute time frame during this time, I see that these 5-minute closes are inside of this candle, this bearish candle, which can be identified as OB. So that was something that I had my eye on during this time. We see 50% is these wicks right here. However, the way that this is formed with the wicks doesn't identify a swing low. So I do still hold the short bias, and I want the full confirmation as to whether or not it's going to be a long or not. So for the time being, I'm going to just play the next candle. Next candle pushes up, closes like that. Following candle holds this FVG, pushes down, pushes up again, pushes down. So when I see a structure like this, I'm looking to see, okay, there's bearish momentum. This is left leg, this is right leg. Right leg being a breakout. So anyone that's looking for a breakout is going long on the break of these highs. So they flip it right away and they're looking to tag this. But I know that there's further sell side down here. So I take a position here and I put my stop loss up above this high, anticipating for them to run down to this level right here. So this is the play that I'm looking for. And I see that next candle drops down nicely, rolled the stop to BE, holding BE. Let's see if we could get it. So price got really close, close out one contract over here. So we're up a little bit of money. We still have that TP over there. Hits TP, price retraces, pulls up again inside this FVG right here. I can see that it wants to drop down, potentially take out these lows down here. So this could potentially be another short entry. So we can take this again, put the stop loss above these candles, and I see that these are triple divergent. So this area becomes very critical. If we can drop off from this area, then we're good to go down. But if we rise from this area and come and use this area that we used to short off, this area that we used to short off as an area to long, then the entire structure flips and we're going to be taking out the upper end of this. So I have these levels marked out. So we have this high was taken, this high was taken. The next high to be taken is this one. So if this structure does reverse, this is where I'm targeting. These ones have already been taken. I'm not too concerned about this dashed line and this dotted line over here. I'm more concerned about this line. But for the time being, I want to see if they could drop down price further. I'm up on the account for the day. So I wait a little bit and I see them pushing it down. Again, this is a very critical area. So I give it a little bit of time over here. I can roll the stop above that candle, push down, whips up, push down, closes like this. Closes like this and doesn't break this wick. So now it's a major issue. If this next candle pulls up and breaks this wick, because this wick is lower than this wick. So theoretically, this should be a liquidity grab. So I should roll the stop loss to break even and wait to see what the next candle is going to do. If this snaps right here, the next candle breaks this wick, this thing should drop off hard to fill in the opening range gap, which is down here, because there's nothing else on the 5-minute time frame between here and over here. That's the only thing that exists, is the opening range gap. So I could see that. What happened to my position? My position got stopped out or something. The next candle does pull up very strong. So I'm looking at this thing on the 5-minute time frame and I can see, okay, we're still holding all these bodies inside this candle, inside the 50%. All these wicks are doing the damage. So I'm looking to go long in this area. I'm looking for this to flip and for us to go long. So whenever I see this candle close right here, knowing that the 50% is over here, knowing that this thing is going to be a long structure, if this next candle can paint up, that's going to be my long entry. So you see the next candle painted up. Since this is the highly probable move of the day, I wanted to take this with the larger position. Where is my stop loss going to be? Underneath this candle, this previous candle low. It is a wider stop, but this is potentially the move of the day. So it's a 16 handle stop. 16 handle stop, gonna buy it right here. My first target is gonna be up here. So from TP, from entry to TP1, I'm looking at about a 1 to 2. That's TP1. Now, if this is gonna be a long, I always want to measure, especially with nothing on the left-hand side, what is going to be the standard deviations of this. So standard deviation number 1, hang on, I shouldn't have flipped it. Standard deviation number 1 is going to be up here. So to standard deviation 1 is going to be a 1 to 4.5, and standard deviation 3 will be a 7.82. Which is solid. That's solid for me to take this trade. It makes sense from a risk perspective. Because even if this thing does drop down, I want to add to this position. I want to add money into this position as risk, knowing that my stop loss should be below this candle. So once I see this next candle paint, and then next candle paint, I'm already confident that this thing is running up. And if this next candle can sweep this high, I want to see how it's going to sweep that high. So I wait and I get that push up and I give it one more, and that's the candle it gives me. So I know that I'm break even on the trade. So my stop loss is here. And I know that I'm waiting for standard deviation number 2. Now, if we make it standard deviation number 2, I'll clear out a portion of my position and I'll leave the rest to run. So this is now the first 1 minute retracement. I want to see if price can push up, retrace, take this out, and then push up again. This breakout right here is very strong. I don't expect price to drop down below that point. So there's no reason for price to come below this candle because of the way that it's broken out to the upside. If you see something like this happen, usually this is called a breakout gap, meaning that this gap should not get filled. It's very strong in the direction that we want to see price headed into. So I'm going to take this off for the time being. We're just going to watch to see how we accelerate. So price never made it down here. Price just immediately pulled up to the second standard deviation. So since it's made it to the second standard deviation, I have to close a portion of my position with nothing on the left-hand side. So I close out 60% of my position, 70% of my position. I'm still break even on the trade. And I'm waiting to see what happens the rest of the time. Currently, it's 7:25. So the next algorithmic time that's going to be playing out is going to be 7:50. So I wait. And this is already becoming a concern in this area. So I want to see them hold this level and accelerate it up from here. So we've accelerated to a new high. We're getting halfway through to the standard deviation. Since I waited from 7:30 all the way up until 7:52, so if 7:50 time this candle breaks, I should take off another portion of my position. You see on this next candle, 7:50 time breaks. That candle is always of some type of importance. So since that broke, we should close out another one of our contracts. I took off the whole thing. All good. So that's it. If you close it out, you've closed out on the day, you caught the move. Now you're waiting to see if potentially there's going to be a retracement to go long again. So you see that we had a high. We have a right leg, left leg, right leg. Right leg pushes down. We have a FEG created in this area right here. So this is something of importance that I want to look at. Okay, 5 minute is a balanced range right here. So if we create another wick, drop down, there will be a FEG between here and here. Now on the next candle down, you can see there's a wick, there's another wick, which is this box that I have highlighted right here. So there's a FEG in this area. So my eye is just paying attention and see how we react in this area. We can see that price pushes up over here, hops into that area, and breaks down over here. So now it becomes critical. It becomes a little bit messy. Because if I want to go long, I know that there's sell side right here, there's sell side right here. Unless this low can get taken out, we shouldn't be going long. The only way I want to go long is if it retraces to this first retracement point. Liquidity grabs that, flips up again, and starts moving up again. So just looking at all the candles painting in this area, equal lows down here. Very sideways, equal lows taken out. A lot of people are going short on the break of this. What do? Reverse it right there. So once I see this candle, if this long were to be true off of this low, then this candle right here can't break. Why this candle? Well, we had left leg, right leg. Same thing that we had over here, reversed over here, right? Look at that, and look at this. Same thing. So it pushes down, one candle up, sweeps both those candles, next candle pulls up in the opposite direction. You get a few candle wicks in your direction to move up. Very weak bearish closes on these candles right here. So this thing should accelerate to take out this level. So if we want to buy this right here, buy this, timing, it's 8:44. Lunch hour algorithm can push to take out this high. So with that anticipation, I know that, okay, I can put my stop right here, and TP1 is going to be this level right here, and then TP2 is going to be up here. So if we make it up here, I'll take off one, roll the BE, and then TP2 will be up here. So let me cancel this. So on this breakout, I added a little bit during the day to buy stop that I had on the screen. We saw the acceleration to the upside. We got this wick that barely missed it. That's good enough for me to take a partial because it's so close to it. So I'm going to close out one. I'm going to bring my stop loss to break even. Play it out. Stopped out, BE. Now I'm fully hands off. Fully hands off, waiting to see how they want to form this picture. Because if this candle wants to hold like this and accelerate, let it. Guess what? You've already seen the move of the day. This is the retracement leg. We have equal lows down here with this candle. On the 1 minute, it's this line. So I want to be very patient. And currently it's 9:10. So is lunch hour targeting sell side or is it targeting buy side? Originally, it was targeting buy side, but we left equal highs. So we have equal lows, equal highs. Which one is getting taken out first? That's the question. Equal lows gets taken out first. We tap into the 50% of the day, which is right here. So if I measure the full day from the bottom to the top, you can see 50% lines up with that line. So that's what that line is. So I'm watching this and I see, okay, we have 1, 2, 3, third leg taking out sell side. So if the structure can flip here, this is going to be a long again. I see a further drop down. Notice that candle never got filled in fully. This wicked it, pulled up. Very nasty candle. Pushes up. Pushes down. This right here, just know they're triggering a lot of orders. There's a lot of orders going in on this area. There's no reason for the candles to be moving like this at PM session at 10 a.m. There's no news on the day. News on the day, nothing. Look at this. There's nothing. So there's no reason for these candles to be moving like this. So what can I look for? Look at the 5 minute. 5 minute is like this right now. So I want to give it another few 1 minute candles, which is, that's why the 5 minute looks like that. But we're tapping off of all-time high. So all-time high broke down. People are probably going short over here. They flip them, bring them, and these are where their stops are, all these levels. So they immediately push price up to these levels to clear them all out. This is a balanced price range. Anytime you have a break of structure on this side and then pulls back up and then pulls back down, all of this is balanced in here. These candles are all balanced in price range. So this is what needs to get balanced, which is this push up. So I want to be patient here and see how they're going to give us the picture. So I see that, okay, we push down, triple divergence, 3 lows, pushes up, flips the structure, drives down. We have an FEG in this area. 5 minute time frame, liquidity grab on the right side. 5 minute very ugly. I want to be a little bit more patient, see what we can get in this area. So I'm waiting. And I see this candle close like this. So if I could get one candle up like that, so we had a drop, whip back, drop, whip back, drop, couldn't break those wicks. Closed the body inside the wicks, but couldn't break those wicks. So I want to give it a few more candles in this area. But if the long is to be true, then this low, this gap, shouldn't get passed. It shouldn't drop down from here. So timing is important. It's currently 10:14. I'm waiting in this area to see how these next few candles are going to be painting. This candle is holding this candle. Let me zoom in on this so you can see it. So this wick is holding this body. This candle could not close inside this candle. So somebody can throw on one contract here and wait a little bit to see, okay, how are we going to react in that area? So another candle, you got to flip up. This structure right here is very critical. Now, if I want to add to it, this is where I'd be adding. Put the stop loss below these candles, below the gap. If this is to run up, where can it run up to? Well, you have equal highs right here from lunch hour. So I want to give it a little bit of time, see how it plays out. You see how the PM session is very messy. Up, down, up, down, up, down, up, down. Accelerating in the direction, but very messy. Boom. Buy side taken. What do? Roll the BE, TP1, sell one off, let it play out. Left leg, right leg. So if price passes this candle, I don't want to participate anymore. This bearish candle right here. So I'll lock in my profit, wait a little bit longer. Very messy, late in the day, 11 o'clock. 11 o'clock doesn't want to drive in a direction. Theoretically, 1, 2, 3. This should be the leg that expands. If it doesn't expand, I'm no longer interested. I want to lock in a little bit more of my profit. We've tapped off the 50% of the fair value gap. This should be used as an inversion over here. You see how these candles are painting? Should be used as an inversion. So I'm just waiting to see how they play it out. And boom, I'm out. Congratulations. You've had a very successful trading day. Based off of probability, based off of logic, you've capitalized on the market. You see the daily time frame, this structure right here, which is exactly what we talked about on session yesterday. This right here, so push up. This is NFP Friday, very important daily candle. We had one whip up, we have another drive down, bearish close, but still a bullish close. If this next candle can whip a little bit of this wick and start pulling up, then it's going to go take out all-time high. Hence, you have a fat bullish candle going up today. So I hope everyone sort of understood what they were looking at today. We were on with Team Elite, so hopefully you guys got it. But this is basically how we played the day. Very nice work with the team. Some people caught the lunch hour long, some people caught the PM session long, some people took the AM session short, some people took the AM session long. But all in all, any move that was worth catching in today was played correctly. So I applaud you for that, and that is going to be our market dissection.